Motions, Honorable Prime Minister and Minister for Finance, Economic Affairs, Planning and Social Security.
Mr. Speaker, I beg to move the following motion, standing in my name. Be it resolved that the Honourable House of Assembly do adopt the report of the Standing Finance Committee on the estimates of expenditure for the financial year 2015-2016 in the sum of $1,426,295,500, and do agree that the said sum do form a charge against the consolidated fund and other funds of the state of Saint Lucia. Thank you. Mr. Speaker, I've been struck down by a very debilitating flu, so I will perforce have to be much shorter in my presentation this morning. So I hope that, Mr. Speaker, you will allow me some leeway as I present the summary of the estimates and expenditure by constant reference to my notes, because I'm exceedingly unwell. Mr. Speaker, the current estimates of revenue and expenditure comes against the background where St. Lucia's economy showed measurable signs of recovery in 2015 after a weak performance over the previous 3 years. This statement, Mr. Speaker, comes from the Social and Economic Review at page 15. According to the review, quote, real GDP growth was estimated at 1.3%, fueled by improved performance in the construction, transport, and agriculture sectors. The turnaround in growth was also supported by appreciable increases in output of the manufacturing, utilities, and wholesale and distribution sectors. However, the financial services and real estate renting and business services sectors remained weak. Mr. Speaker, against this background, let me first of all summarize the 2015-2016 budget performance. You'll recall that the approved budget for the fiscal year 2015-16 amounted to $1.464 billion, with estimated gross domestic revenue and grants of $1.118 billion. As at the completion of the budget preparation exercise, the available data suggested an outturn in aggregate of $1.314 billion in expenditure, inclusive of principal payments, repayments, and refunds. Total expenditure before principal repayments and refunds amounted to $1.182 billion, while total revenue and grants were estimated to have reached $1.052 billion. That is roughly 27.1% of GDP. Therefore, central government fiscal operations is estimated to have generated a lower overall deficit of $130.39 million, or 3.4% of GDP, compared to a target of $226.9 million, or 5.8% of GDP in the 2015-2016 budget. Let me quickly, Mr. Speaker, turn to revenue and grants to see the performance in that category. At $1.052 billion, total revenue and grants were expected to fall short of the approved estimates by $55.7 million, or 5% for the fiscal year 2015-2016. Consistent with the improvement in economic activity, recurrent revenue receipts increased by 6% relative to financial year 2014-15 to reach $991.7 million, or approximately 0.8% above the original target of $984.2 million. Collections from the tax revenue category were revised to $912.4 million, registering an increase of 6.3% compared to the outturn for 2014-15, while collection from the non-tax category was estimated to fall short of its target by 5.1%. All major revenue lines contributed to the positive outturn in recurrent revenue collections, with the exception of IRD VAT collections and a key revenue measure, the Citizenship by Investment program, which suffered a delay in implementation. It is worth noting, Mr. Speaker, that the increase in recurrent revenue was offset by 44.8% shortfall in grant receipts, resulting from lower than anticipated disbursements from donor agencies, governments such as the European Union and the government of the Republic of China on Taiwan. Overall, Mr. Speaker, recurrent expenditure is estimated to have recorded an outturn of $1 billion and $46 million, equivalent to 99.8% of the revised budget. Preliminary data indicates equivalent to $98.8 million of the revised budget. Preliminary data indicates that spending on all major categories remained broadly in line with the estimates, except for goods and services, which exceeded the budgeted amount by $3.9 million. In the case of wages and salaries, Mr. Speaker, the total outlay on personnel expenses was below the revised budget as a number of funded vacancies were not filled. Spending on transfers was lower than budgeted, resulting in savings of $3.8 million, which was applied to settle outstanding liabilities of the OECS PPS drug service. Total interest payments on public debt amounted to $162.3 million, which translates to an increase of $13.7 million, or 9.2% above the outturn for 2014-2015. While interest payments increased relative to the outturn for 2014-15, it remained below the approved budgetary allocation for the financial year 2015-16. This was primarily as a result of a reduced level of borrowing during the fiscal year. A very quick look now, Mr. Speaker, at capital expenditure. And remember, we are looking at expenditure generally speaking. Capital spending was again seriously affected by the limited resources available to fund the budget, as well as delays in implementation of some major projects with secured funding. Consequently, spending on the capital expenditure was lower than programmed and is estimated to have achieved a 64.9% utilization of the approved budget, compared to 71.8% in 2014-2015. At $268.7 million, 6.9% of GDP roughly, the projected outturn for capital expenditure is $34.6 million, or 14.8% higher than the outturn for the previous fiscal year. As mentioned previously, a number of projects with secured funding were negatively impacted as a result of the delay in disbursement of funds and resulted in low implementation of government capital program for the year. Some of the major projects affected by the delay in disbursements include furniture and equipment for the new National Hospital, Soufriere Enhancement Program, Town Square, Rosalie Human Resource Development Center, Library Market, BNTF 7th and 8th Program, Proud Agricultural Transformation Project, Management of Black Sigatoga Project, NICE and St. Jude's Hospital Reconstruction, Lighting of Plainfield National Aquatic Center, VA4 Water Supply Project, and Shock to Rosalie Road Improvement Project. Against that background, Mr. Speaker, let me quickly turn to the 2016-2017 budget forecast. The 2016-17 budget proposes expenditure totaling $1.426 billion, inclusive of provisions for refunds and principal payments. Of this amount, recurrent expenditure is estimated at $1.100 billion, representing 7.1%, while capital expenditure is projected at $325.9 million, equivalent to 22.9% of budgeted expenditure. Total expenditure before principal repayments and refunds amounted to $1.293 billion compared to $1.334 billion in 2014-15, indicating a reduction of $41.6 million. The budget also forecasts strong growth in domestic revenue, in keeping with the improvement in economic conditions anticipated over the new fiscal year. To this end, total revenue and grants, Mr. Speaker, on a gross basis are projected at $1.174 billion, net $1.1634 billion, of which 91.7% or $1.077 billion constitute domestic resources made up of recurrent and capital revenue, and 8.3% or $97.2 million in external grants. Very quickly, let's see what happens with revenue projection. At the projected level of $1.174 billion, total gross revenue and grants represent an increase of $111.8 million over the provisional outturn for the financial year 2015 and 16, and of which $54.2 million is attributed to an increase in recurrent revenue. Inflows from recurrent revenue are projected at $1.046 billion for the fiscal year. This represents an increase of 5.5% over the revised estimates outturn for financial year 2015-16, which was put at $991.7 million, and reflects the impact of the revenue enhancement measures implemented last year, as well as the improvement in economic activity. The total projected recurrent revenue for 2017 is comprised of $945.7 million, or 90.4% of tax revenue, and $100.2 million in non-tax revenue. Tax revenue is forecast to increase by 3.6%, or $33.3 million, above the revised estimates for 2015-16, while non-tax revenue is projected to increase by 26.4%, or $20.9 million above the revised target. It might be useful just to look at the distribution of the relative contributions of the major categories of recurring revenue as follows. If we start, let us say, from VAT, that contributes about $356.0 million, or 34%. Import duty, $108.9, that's about 11%. Service charge, $75, or that's 7%. Excise tax, $76.5, that's about 7%. Other taxes, $63 million, that's 6%. Taxes from income, $245.4 million, that's about 25%. Property tax is coming in, and that's good news, at $10.9 million, but that only forms about 1% of overall revenue intake. Licenses, $32 million, or 3%. And if we include the CIP revenue intake, this year it's estimated at $24 million, or 2%. Perhaps so I can clarify a little bit by just referring to the look at the itemized analysis of the expected revenue performance in 2016-17 compared with 2015-16, so that members could get a sense of the movements of the principal heads. Take income tax for individuals. The revised estimates put it at 104.1 million. The 2016 estimates put it at 105.2. Income tax from corporations estimated at 77.1 million. Estimates for 2016-17 put it at 78.9, roughly a change of 2.4%. Income tax arrears, revised estimates was 41.9. This year we're putting it at 42.6, a percentage change of 1.6. Income tax, withholding tax, 25.7, revised estimates for 2016-17 about 28.7%. The percentage change is about 11%. VAT, 345.4 in 2015-16 is coming at 355.6 in 2016-17, a change of 3.1%. Import duty, 105.9 is coming in again this year at 108.9. Service charge, 69.1 is coming at 75. Excise tax, 74 is coming at 76. Stamp duty, 11.9 is coming in this year at 12. Property tax, it was 10.8 in 2014. 15 is coming in at 10.9 for 2016-17. Other taxes, 46.5, and estimated for 2016-17, 51. So the revised estimates for 2015-16 suggest a total of 912.4 million. 2016-17 put at 945.7 million, and a percentage change or an increase of 3.6%. May I quickly take our members through the various tax heads so that they can get a sense, Mr. Speaker, of what's happening through the various tax heads. Let's take taxes on income and profits. Taxes on income and profits are expected to amount to 255.4 million in the 2016-17 budget proposal, up from 248.8 million in the 2015-16 revised estimates, representing an increase of 6.5 million, or by 2.6%. This is mainly attributed to the expected improvement in revenues from withholding taxes, taxes on individuals and corporations. Income tax individuals. Revenue from income tax individuals is projected to generate 105.2 million in 2016-2017. At this level, the receipts from this line represent a marginal increase of about 1% compared to the revised estimate of 2015-16. Income tax on corporations. Revenue from income tax corporations is expected to increase marginally to reach $78.9 million in 2016-17. This represents a 2.4% increase from the revised estimate of 77.1 million for preceding year and reflects the effects of improving corporate profitability. Taxes on international trade transactions, and here we are speaking of import duty, service charge, excise tax, imports. Taxes on international trade custom duties are anticipated to reach 438 million in 2016-17, up from 421.9 million in 2015-16, representing a $16.5 million increase. This revenue category is expected to benefit from the full impact of the revenue enhancement measures implemented last year and in previous years. The forecast for the major items under this category is as follows. Import duty. Import duty is projected to increase by 2.8% from 105.9 million to 108.9 million. The collection on this item reflects the expected continued increase in the value of imports. Service charge. The budgeted amount from service charge imports is 75 million, or 8.6% above the revised estimates for 2015-16. It reflects the impact of the rate adjustment made last year, as well as the expected level of international trade, which continues to be buoyant. Excise tax imports estimated at $76.5 million. This item consists of excise tax on fuel under the modified pass-through mechanism, as well as the sin products and motor vehicles. It is projected at $76.5 million for 2016-17, equivalent to 3.5% increase from the revised estimate for 2015-16. The component of the tax on fuel products under the modified pass-through mechanism accounts for 41% of the total and amounts to $31.6 million. The calculation assumes a per unit tax on both diesel and unleaded gasoline of $2.50. The VAT from international trade, transaction customs VAT, is projected to yield $167.1 million in 2016-17, increasing by $4.9 million or 3% from the $162.2 million projected outturn for 2015-2016. Taxes on domestic goods and services are expected to amount to $241.1 million, up from a preliminary outturn of $230.9 million for financial year 2015-16, representing $10.1 million additional revenue, or 4.4% increase. This improvement is mainly due to the anticipated increase in the collection of VAT on domestic goods and services. Value-added tax, IRD, that's Inland Revenue Department, from domestic sales and services is projected to increase by $5.7 million, or 3.1% over the 2015-16 outturn, to reach $188.9 million in 2016-17. Receipts from this source account for 78% of revenue from taxes on domestic sales. Overall, the value-added tax is budgeted to generate $356 million for 2016-17 fiscal year. The budgeted amount of for 2016-17 represents a 3.1% over the revised estimate for the last financial year and is expected to be influenced by the uptick in economic activity. Very quickly, Mr. Speaker, let's see what is happening with non-tax revenue. The 2016 budget proposal forecast non-tax revenues totaling $100.2 million, a 26.4% increase from the $79.2 million collected in 2015-16. This increase is mainly attributed to higher revenues anticipated from the implementation of the Citizenship and Investment Program and the new vehicle licensing regime. The following are the major components of non-tax revenues and their expected performance in 2016 budget proposal as compared to year-end 2015-16 figures. Licenses. Receipts from licenses are projected to generate a total of $32 million, reflecting an increase of $3.9 million, or 14%, above the revised estimates for the previous financial year. The increase reflects the full impact of the new vehicle license regime, as well as the anticipated upsurge in the renewal of licenses at the end of the triennium. Fees, fines, and forfeitures. Revenue from fees, fines, and forfeitures is expected to yield an additional $22.7 million to reach $52.1 million for the new fiscal year. At this level, the projection represents a 77% increase over the outturn for financial year 2015-2016 and is influenced by the revenue intake anticipated from the CIP fees. In respect of the CIP, Mr. Speaker, I've already indicated that the projection is for a revenue intake of $24 million. Let's see what is happening for capital revenue. Capital revenue is projected to increase significantly above the revised estimates for 2015-16 to yield a total of $31.1 million. The increase is predicated on approval being granted by the Caribbean Development Bank for use of a revolving fund established as part of the Shelter Development Project and PROUD, as well as the sale of Crown lands for major hotel development in the south of the island. Grants. Total grant disbursement for the financial year 2016-17 is projected to decline by $28.7 million, or 41.3%, compared to the approved estimate of $126 million for the financial year 2015-16. A total of $97.2 million is anticipated as capital grants, which constitute 8.4% of total resources. It is expected to cover 29.8% of the government's capital program for the year. Disbursements were programmed based on existing agreements with the donor agencies, friendly governments. The 2016 budget estimates proposes expenditure amounting to $1.426 billion compared to 2015-16 revised estimates of $1.48 billion, decreasing by $54.2 million or 3.7%. Relative to the preliminary outturn for 2015-16, the proposed budget represents an increase of $111.7 million or 8.5%. The following information is made available to honorable members to get a sense of the composition of the budget expenditure in the 2016-17 budget proposal. Let's look at wages and salaries. For 2015-16, for the revised estimates, that was put at 467.8. For 2016-17, it goes to 476.9. Debt service payment, that was put 2015-16 at $285.2 million. That is going up to $293.7 million. Transfers, $111.9 million. That is going up to $131.3 million. Goods and services, $185.1 million in 2015-16. The draft estimates for 2016-17 put it at $198.4 million. Capital expenditure, $430.4 million for 2015-16. The draft estimates put it at $326.0 million for 2016-17. So the total would be $1.48 billion, and for 2016-17 is at $1.426.3 billion. Now, having said that, it's useful just to comment further on recurrent expenditure. Recurrent expenditure is estimated at $1,100,318,800 for 2016-17, representing an increase of $50.2 million or 4.8% compared to the revised estimates of $1.05 billion for the preceding year. When compared to the 2015-16 preliminary outturn, the outlay for 2015-16 represents an increase of $54.6 million or 5.2%. The increase reflects significant upwards adjustments to cater for increases in transfers and goods and services. Wages, salaries, and other related payments continue to be significant and are projected to increase by 1.9% from the revised estimates of $467.8 to $476.9 million for the new fiscal year. Honorable members may well ask why this increase, but this increase is driven mainly by additional provisions made for police and teacher upgrading, as well as retiring benefits to new retirees. When compared to the preliminary outturn for 2015-16, the projected outlay represents a 2.4% increase. The total allocation for wages and salaries accounts for 43% of recurrent expenditure. I want to reemphasize that. The total allocation for wages and salaries accounts for 43% of recurrent expenditure. A note on debt service. A sum of $293.7 million has been allocated for debt service payments, comprising of interest payment of $170.4 million and principal repayment of $123.3 million. The projection represents a 3% increase relative to the 2015-16 revised estimates and account for 27% of recurrent expenditure for 2016-17. Principal repayment is forecast to increase by a mere $3.7 million to cover the amortization of external loans, $3.2 million, and domestic debt, $0.5 million. Of the total amount allocated for debt servicing, interest payments constitute 58%, while principal repayments account for 42%. The $4.9 million projected increase in interest payments is expected to cover interest charges incurred on debt contracted in the financial year 2015-16, as well as new debt to finance the 2016-17 deficit. Transfers. The budget provision for transfer payments have been increased by 17.3%, or $19.4 million relative to the revised estimates for 2015-16 to reach $131.3 million. The increase will cater for additional provisioning in anticipation of the opening of the Owen King EU Hospital and expensing item programs previously included in capital expenditure. These programs include STEP, $2 million, Coudme Saint Lucia, $500,000, Hope, $500,000, and Tourist Board administrative expenses, $8.9 million. Goods and services. The government is proposing an allocation of $198.4 million under goods and services to cover the cost of essential supplies, rental, utilities, and other services required for its operations. The budgeted amount represents an increase of 7.2%, or $13.3 million compared to the revised estimates for the preceding year. The increased allocation is primarily attributed to, among other things, additional provision made for items reclassified from capital to the recurrent budget, for example, the catastrophic risk insurance. And I want to go over that again. Honorable members will note that there's an increased allocation for $198.4 million. And I want to repeat what I said, that the increased allocation is primarily attributed to, among other things, additional provision made for items reclassified from capital to the recurring budget, example, the catastrophic risk insurance. In fact, Mr. Speaker, that includes the consulting management consultants for the forensic lab, 1.5, lease payment for the new finance complex and the Anna building to relocate staff of the Treasury Department, net increase of $5.9 million. It's a tough one, Mr. Speaker. And to cater for the increased cost of medical supplies, $1 million. A contingency provision of $3 million is included to cater for unforeseen and urgent expenditure during the fiscal year 2016-17 and represent a decrease of $1 million. Capital expenditure. As it relates to capital expenditure, the government is proposing to allocate $326 million to its capital program in the new fiscal year. The proposed capital budget represents $104.5 million, or 24.3% decrease compared to last year's revised estimates. Surprise, surprise. The downward adjustment reflects the reclassification of some capital items as recurrent expenditure, as I indicated earlier on, as well as a need to keep the overall deficit within the level witnessed over the last 2 years, thereby reducing the rate of increase in debt accumulation. Approximately 50% of the capital allocation is expected to be spent on building and infrastructural works, while 9.3% or $30.4 million is projected to be expended on wages and salaries for project staff. Grant-funded capital expenditure accounts for 29.8% of the projection. While 9.5% is expected to come from domestic revenue. Very quickly, Mr. Speaker, what is the overall impact on the fiscal balance? The 2016 budget projections target a primary surplus of 1.3% of GDP and an overall deficit of 3.2% of GDP. The budget forecasts a narrowing of the overall deficit from 130.4 million, or 3.4% of GDP, to 128.8 million, or 3.2% of GDP. While this is a notable achievement, there is still much more required to be done to reduce the deficit to a sustainable level that is one that will bring our borrowing requirement to a minimum. Based on the forecast revenues and expenditure budget for 2016-17, a financing gap of 252.1 million is projected, indicating a downward adjustment of 94.3 million from the 346.5 million approved in the 2015-16 budget. Of this amount, 29.4% is expected to be financed from external loan disbursements, while 70.6% is expected to be sourced by means of treasury bills and bonds. Mr. Speaker, I'm not going to go through the usual tables of variance on this occasion. And that's one of the things I meant when I said I wasn't up to it because of my health. The honorable members can almost go through for themselves the table of variance by simply looking at the respective budget allocations and comparing what is approved, what is revised, what is in the draft, etc. And they can see for themselves explanations of the variance. So, for example, in the Office of the Governor General, there will be no variances in the 2016 budget for that agency. So I'm sure honorable members can take care of that. Mr. Speaker, I thank you. Thank you for understanding. And I now present the estimates of revenue and expenditure for debate by honorable members. Thank you.